iwoca is an SMB lending platform. Christophe, please come on stage. You are getting interviewed by, do you pronounce this correctly, Vasile, like the chateaus in France, or Vasile, or how you? Vasile, okay, better. Yeah. Welcome back.
Thanks for having me.
It's like number 8 for you or so, no?
Yes. At least.
At least.
Hi, good morning, everybody. Christophe, thanks for coming with us on stage for this Q&A. We have been proud to have iwoca as our portfolio company, and since leading the seed investment in December 12th, this was an amazing journey to watch. You were, what, 3-4 person team at the time? I remember reviewing the loan book, 600K, and then 6.5 years later, 900 million lent to over 35,000 businesses. And I think 300 people strong team now. What an amazing journey. And I think the question for us is to understand, I think when we looked at it in 2012, I think there was a definitive funding gap in the market. Banks didn't lend, 2009 crisis. It was sort of such an easy starting point. And after close to $1 billion of lending provided to so many businesses, do you think the funding gap has been now closed, filled up? Do you see still a lot of opportunities in that space?
So first of all, I remember our first meeting very vividly. I never expected you would ever invest in us. So thank you for the trust that you have put into us so early on. And to your question, the funding gap actually increased over that period. So our grand mission to reverse the trend and help access to finance for small businesses has certainly been successful for us, and we've been growing significantly, as you said. Literally every year, we doubled. But if I just look at the UK, our home market, as a snapshot, when we started, there was about £40 billion in bank loans outstanding to businesses with less than 2 million in annual revenues. And that number has dropped by 4 billion, 10% in nominal terms, despite all of these years of super low interest rates and huge surges in consumer credit, mortgage debt. And so our customer base has seen a net reduction of lending to them. So we're trying to reverse this trend, but I think we have a long way to go to be successful in making that happen.
I think looking at the growth trajectory you guys had, which again, another phenomenal story. I think for the last 7 years, growing 100% year on year, consistently, both on the team side, the loan book. Particularly 2018 was an amazing year. You basically lent to half of the 35,000 businesses in just that year alone. Can you just expand a bit? Was it the technology, the people, the development in the open banking API community? What are the factors that actually allowing you to scale and to lend so much to so many businesses in just 1 year?
The technology plays a huge role into this. We've made about 90,000 credit decisions last year, and we had, on average, throughout the year, probably about a dozen human underwriters. 70% of our decisions are fully automated. If you do not get to this level of automation, you're simply not able to process that amount of customers that are coming through our platform on a daily and monthly basis. So I really do think that the years of investment that we have made in fine-tuning the platform have been a major factor why we're able to grow to the levels where we are today.
And recently, I think it was February, March, there was a big piece about you guys that you are now have a larger market share of the sort of smaller overdraft credit facilities to SMEs compared to HSBC and Santander. I mean, that's a great achievement. Big applause on that side. How do you see this? I mean, you're a small business compared to these big banks. Do you think this is just they were not interested in that particular sector, or they're not capable underwriting at the right cost to those businesses, or they're not fast enough? I mean, how did you manage to get 12% market share when you have those big banks sort of basically doing in the same field?
Yeah, that sounds really crazy that we have the equivalent of 12% market share in the UK banking market to our segment. You know, if I had told you that when you invested, you probably would have walked out straight away. But it does show kind of the sheer amount of businesses that are not being served by the banks. And I would say that while we have made more approvals to businesses end of last year than HSBC did, the volume, of course, the value is a lower percentage. And I think that does show that banks really have problems to serve these very small micro and small businesses, as they don't necessarily have the technology that we have to serve them so seamlessly. And I would add a second point, they also don't have a massive interest in doing so. These small businesses tend to have a higher risk than the medium-sized businesses that they're really focused on, and therefore often they're falling out of their eligibility criteria. So I think it's those 2 points that really enabled us to take such a significant share of the market over the years. And I think it's, we can compare our share to the share that banks have, but I think I compare my share more towards the number of companies that I think are not served as well at all. So I think I have an as large share in the unmet demand as I have a share in the already met demand. And I think our growth potential is much more measured towards the huge unmet potential that we're trying to address.
And how the relationship with these big banks have evolved in the last 7 years? I know that you have signed partnership with Commerce Bank. Do you see similar developments with other large institutions? And what do you see that sort of partnership, if at all, going forward with the larger players?
The relationship that we have with banks is really an interesting one. And Commerce Bank invested in us relatively early on in 2015. And Intesa Sanpaolo from Italy invested in us in 2017. And we see very different mentalities around working with fintechs. So in Germany, we have really successful partnerships with banks, and they're actively looking for these partnerships and trying to serve their customers through us, as they've identified that they cannot serve them themselves. And I think in Germany, the need for them to generate a return on their customer base is even higher than it is in the UK, which in itself is a slightly more profitable banking market for them. And I think that's kind of something that we see in our conversations. We're more successful working with banks in Germany than we are in the UK. Although we do have partnerships with Royal Bank of Scotland in the UK as well, which is obviously the largest bank in our segment. But clearly, German banks are much more active in trying to serve their customer base through partnerships with us.
I know you're part of the panel later on where you have funding circles and other players, and we've seen some of those well-known IPOs of the fintech businesses. What are the plans for iwoca? Are you guys thinking, I know the 7 years is long enough, but you guys want to have 1 million businesses that you want to lend to, so it's still a long time to go. What is the ambition for the business? What are the plans for the IPO, if any, and where do you see yourself in 3-5 years?
So yeah, our mission is to lend to 1 million small businesses, and so there's a long way for us to grow. But I do think, at scale, it's possible. Every bank has about 1 million small businesses that they're banking with, so across Europe, we should be getting to 1 million customers. But it's also commitment in this mission to really focus on the micro and small businesses and not be quite easily kind of distracted by serving medium-sized businesses that you can lend much more in value to. So if I look at our past and future, I think over the last years, we have really been succeeding in serving an unmet demand by creating this very powerful automated platform. And the feedback that we're getting from customers is that this platform does not exist in the market. You can look at our Trustpilot feedback, both here in Germany as well as in the UK. We probably had about 5,000 customers leaving positive feedback on us, which has really been, for us as a team, hugely encouraging. And I think that's going to grow. That platform is there. We're perfecting it. We're making lots of improvements to it. It's far from being where we want it to be. But if I look at the future, I think we're only starting to innovate by being a lot more disruptive than we have been in the past. In the past, we have built a platform that serves an unmet need, for customers that have identified a cash need and need to have access to financing relatively shortly. But we haven't yet completely disrupted the way how they're thinking about financing, and we haven't been able to put this normally into their day-to-day business. And we have invested quite heavily already in our API platform, and we're powering already about 25 other companies to enable them to provide credit to their customers. And I think that's a trend that we're certainly going to invest much, much more into, because our product vision is that a small business should have access to financing when and where they need it. And I believe in 5 years, there will be a lot fewer companies going to a bank branch or contacting their bank for financing, because the financing will be already made available at the point of need, regardless whether they're buying something or through their cloud accountancy software or through services like Square or PayPal that have already moved into the space. And so I think the real period of disruption is only starting now, and I'm very excited that as someone that has built a very powerful product, that we're really well positioned to be at the forefront of that trend.
I think we've run out of time, but Christophe, thanks for a great interview, and good luck with your ambitions.
Thank you.
Thanks.